Thank you for joining us. My name is Jay Turan, and I work for FFKR Architects, and I'm also the marketing chair for the NAIOP Utah board here in Salt Lake City. And we are joined today by three very prominent industry professionals to talk about some of the issues at hand that maybe could help you and other members who are watching this video. So good morning, everyone. We have Henry Schwendiman from Q10 Bonneville Real Estate Capital. Good morning. And we have Angela Eldredge from Price Real Estate. Good morning. And Chris Kirk with Colliers International. Good morning.
Morning.
Good morning. Well, thank you for taking time out of your day to spend a few minutes with us. And feel free to chime in. This is an open discussion, and give yourselves, a moment to, think about your responses if you need to. So let's go ahead and start off with the first question. So, it's an unprecedented time, and we are hearing a lot about rent deferment or rent forgiveness. Can any of you explain a little bit more about what that is and why it's not a viable option, and maybe some of the consequences?
I'll maybe lead out just because it starts with a lease agreement, and that's where we start on the landlord side, is with a lease agreement with our tenants. And that lease agreement gets secured by loans that end up getting encumbered. But that lease agreement is something that's set forth for and in place for a period of anywhere from a year, 3 years, 5 years, up to 20 years, sometimes even longer, I suppose. But our longest lease term that we've ever signed on the industrial side is 20 years. And you're basically making covenants to each other that you're both going to perform everything that's within that lease agreement. There's decisions made on the financing side based on the covenants of that lease agreement, the rent that comes into the landlord. It's underwritten as assuming that maintains occupancy during that time. And then depending on the size of the tenant, lenders have obligations, or they have rights. I shouldn't say obligations. They have rights for approval, and you can't just modify an agreement without that lender's consent and approval. And they're never going to weaken their position. So if they have, they're not going to want to give on a termination. They're not going to give on rent reductions. And as a landlord, if we do anything that changes the lease agreement without getting the lender's consent, which is something that's required, we then violate our covenants with the lender. And so there's multiple layers of promises made between people, and it doesn't just stop with the landlord. It goes up beyond there. And even the landlord or the lenders have people that they answer to as well. So it really does start a ripple effect.
Wow, that's very interesting how it goes up the tree like that. Henry, Chris, did you want to comment?
I mean, as a lender, those leases are the foundation of the payment that comes in, to pay the mortgage. And lenders are really trying in their loan documents and everything have restrictions on what the landlord can do without their consent. And it is a violation of the loan covenants if the landlord were to give forgiveness or do something without at least notifying the lender and getting the lender's acknowledgement. We have in our portfolio about 1,000 loans. And it's interesting right now, we've had about 200 of our borrowers in written form request consideration. And the interesting thing is about half of them are opportunistic, is what I'd say. And so we have them send in all this information, and we do an analysis of what rent is actually coming in and whether that can service the debt and so on and so forth. And it's interesting that quite a few of the people asking for consideration can still service their debt on the tenants that are paying rent. So that's what I term opportunistic. They see a crisis and they're saying, hey, let's go see if we can get something out of the lender. Most lenders are not viewing that very favorably. It's a little bit of a problem. But like I said, we have 1,000 loans and about 80% are still, they made their April payment. And most of the other ones, I mean, I think we only have maybe 3 or 4 that actually haven't made their payment on time. But sure, a lot of people asking for help. It's a real problem. It's taken a lot of resources, both at the lenders level, at our level, and at the borrower's level. Everybody's just trying to figure out what's going on in this economy. So I don't know if that helps.
No, that helps a lot. Chris, did you want to comment on maybe the tenant side, or, have they covered it
No,
all?
I think, well, I think I'll on this particular section, I can comment on the level of consistency that I'm hearing here on particular buildings that represent the ownership. And we have been hearing from different tenants that have expressed, this is prior to April rent being due, expressed some level of duress. And my understanding, and it's nice to hear that echoed by Angela and Henry, is that if there is a straight out ask for rent, call it abatement or deferment if they're offering that, that the landlord in that case has a bunch of documents and paperwork that need to be filled out by the tenant, and then in that case it's up for lender approval. And so that's the way that we describe it when we hear from a tenant like that. And so I'm pretty happy to say that across at least the properties I'm involved in, the April rent rolls have been pretty good. We do have a few tenants that are in trouble, and we've heard that they just can't pay rent, and so we're dealing with those on a case by case basis.
Well, that leads into my next question. For those of us that aren't familiar, can borrowers modify existing leases without obtaining lender approval? Have you heard of any examples of that?
You have to look at your loan documents, and it depends on how good negotiations were when you were doing your loan. Most loan documents, you're not allowed to modify any lease, but there are some that will categorize tenants into two categories. One is a major tenant, and others that are a minor tenant. And you can do things with minor tenants. You can do modifications. You can't, without getting lender's consent, you just have to notify the lender. But that's, most loan documents, I would just say I'd start from always trying to get lender's approval if you're doing any kind of a modification, because, and lenders are trying to be responsive. They're piling a lot of resources towards this effort. And if somebody's asking, look, we're going to help these tenants out by giving them 90 days deferment or something like that, or 50% rent, what we're seeing is most lenders are consenting to that. We have a couple of lenders that have actually come out and globally said, if anybody asks for the ability to modify leases, they'll allow them to do it without getting acknowledgement up to 6 months. Anything beyond that, you'd have to get their approval. So that's just two or three that have just kind of said, look, we don't want all these requests. Go ahead and we give you the blank authority to do this. But 99% of the lenders are saying, you got to come talk to us first. Just don't modify those leases without letting us know.
Henry, can I just ask you a question? Because I've got one of these properties where we're dealing with this, and the property owner, in this case out of California, they own an asset in the suburban office market, has at least told me that, as I said before, if there's a tenant that coming for a straight abatement discussion or that as I mentioned, the paperwork, you got to go through these hoops and then to lender approval. If we're negotiating a blend and extend and a lease deal, it's at least been represented to me in that case that that's not something that they would need to seek lender approval for. I may have misheard that, but what is your thought on that?
Well, if they're a current tenant and if they have an option to extend, you don't have to get lender approval. So in the lease is an option, and they're extending on the terms of the option, they don't have to get approval. If there's not an option, if it has a maturity, date, and that it's going to be considered a new tenant, and you need to get lender approval for that. It really depends on what's in the lease already.
Right.
If they're operating within the bounds of as Angela said, the covenants of that agreement, then they can do whatever they want. But if they go outside of that, they're going to have to get lender approval.
So, Henry, does lender approval, or, I mean, it sounds like the lender gets involved pretty early. I mean, that's a good idea to, when does he typically or she typically get involved when it comes to rent deferment? Is it just right at those initial discussions?
Well, I think, yeah, I mean, right at the beginning, I mean, I mean, if you have something with your tenant and you are able to work it out, then you're both, on board with what you want to propose. Then you can go to the lender. You don't have to get the lender involved immediately, although you can. I mean, I just think if you got some tenants in trouble and they need some help, and you kind of talk about it, then you can go to the lender and say, "This is what we want to do. Do you approve?" That makes sense.
Yeah, yeah.
You certainly
Is
got to
it
talk to them before you sign anything or do any kind of agreement.
okay?
And one other
Uh,
point, if a tenant misses a lease payment, that's between the landlord and the tenant, not the lender.
mm,
So you can have tenants that miss payments and you don't talk to the lender. But if you're going to change the terms of the lease, you have to talk to the lender. If they miss payments, they're in default on their lease, as Angela can attest. Whether the landlord, as the borrower and as the owner of the property, wants to enforce default provisions, that's a different decision. In other words, do you see what I'm trying to say? If they miss payments, and that happens quite often. I mean, a tenant may miss payments. That doesn't get the lender involved, as long as the borrower is making his mortgage payment.
mhm.
You know, so that makes
Yeah.
And I think that's where it becomes tricky on the landlord side, that tenants probably, as they're looking at this, some maybe being opportunistic, as Henry talked about. But if you have a tenant that, depending on where your loan to value ratios are when you're taking out a mortgage, even if you're fairly conservative at a 60-40, if you have a tenant that occupies 75% of the building or 100% of the building and they don't pay their rent, suddenly that landlord isn't covering debt service. And so they're taking it out of operating cash flow. And I think the main message that I think has been interesting is that for some reason rent's being looked at as not a fixed cost. It's something that's more variable and could potentially be changed, where every other instance, like your mortgage at your own home, you don't look at that as an optional cost. That is something that you have to pay every single month you've committed to do. And this seems to be on the opportunistic side, where this is one of the first places that they're looking to try to cut some of their costs. It's also probably one of their largest, which I understand, but it's a fixed cost. It's not just part of a marketing budget that they can have discretionary, income or, decisions on what they're going to, how they're going to spend those dollars. This is a fixed cost that others moving forward have made commitments on as well. And I think that's the part that's been interesting through this process, is that it's been viewed a little bit more on the discretionary side rather than fixed.
And as Angela said, it has huge cascading effects. If tenants don't pay their rent, if then the borrower doesn't pay his mortgage, and then the lender has regulatory requirements and obligations to its shareholders, stockholders, annuity holders, whatever. If it's a life company, the life companies don't have, they're not like banks. They don't have a bunch of deposits. They get their money to invest from insurance policies and annuity sales and stuff like that, which are obligations on their end. So if they don't get their mortgage payment, then they have an obligation to still keep paying on the annuities or on whatever it is, and it just goes all the way down the line where, I mean, it's just not like there's a big lender sitting there that has that doesn't need to get paid. They need to get paid just as much as anybody else, and it causes huge problems if they don't get paid. So it's a huge cascading effect. It all starts out with people getting paid a salary. If they don't have a job, or they can't, or if a tenant, can't pay their employees, that's really the first step to the thing, is people being able to be paid. So,
So these tenants, I know some of you are handling them on a case-by-case basis, but renegotiating leases has been a topic. Is that a good idea? Is that a bad idea? Or is it, a case different for every tenant, case-by-case basis? What are your thoughts?
I think it's a bad idea. You have a lease, but I mean, you have to evaluate. Like we said, there's some people that are taking advantage of this. It's opportunistic, but if there's somebody really in need, if you have a tenant and they literally can't pay because they're shut down, if it's a restaurant or a non-essential medical tenant or something like that, and the governor said you can't function, what do they do? There's all kinds of loans and things like that from the federal government and state, and they got to avail themselves of those resources. But I think as landlords and owners, you just have to kind of look at it on a case-by-case basis. But renegotiating the leases is not a good deal because so many people down the line are affected by that in a negative or way.
That's great insight. Angela, Chris, did you want to chime in on renegotiating leases?
I would just add is, yeah, I don't think renegotiating leases is a good idea, but I do think that after we get past this and moving forward, there's always something with a crisis that we learn. In '08, we learned a little bit more about the banks having better balance sheets, and they put more regulatory controls in place as far as lending, which is why our banks are healthy today and there's still money available, and we've made some good corrections. I think businesses are going to look at their kind of their reserves, if you will, a little bit differently, and these costs a little bit differently moving forward, where their balance sheet may look healthy on an evaluation of the business, but do they actually have that cash? Do they have the dry powder to be, for an instance like this, where if they're not getting that, the consistent money coming in on a monthly basis, if they have to shut down, like Henry said, due to a government or something like that requirement, could they carry? Because I think what we're seeing is the people that are really in trouble were probably a little bit in trouble before this happened. I mean, 45 days in most cases aren't going to make or break a business. And so they were probably over leveraged or overextended to begin with. And so hopefully the outcome of all of this is that businesses start carrying a little bit of a healthier balance sheet moving forward.
So I'm listening to you guys, and I totally appreciate your perspective, and I think that from the tenant side, and those of us that are, in this case, it probably trickles down, and that would be to the communication to, in my case, the broker, and hearing where those pain points are. I would say, again, the good news is, I would say across my portfolio of clients, having surprisingly few conversations with landlords right now. But that's not to say that the conversations aren't happening on the ground level with us in terms of when they're asking about their lease. That lease is a very real cost, and if revenue has completely stopped or is slowed down, these tenants are concerned. So I'm definitely hearing and spending a lot of time talking to them. My counsel, to be clear from the get-go, is that this is not an opportunity. This is not a time to be opportunistic. This is not a time to just seek relief or different terms because you might perceive the market changing. And so we're very careful with that. I think that for me, it's surprising looking across the spectrum of different industries, who's been impacted and how we're affecting the discussions with the landlords, if indeed we're having them. Most of these are hopefully short-term, and to Angela's point, these are companies that, in the most part, have plenty of cash on hand to ride this out. But let's take the case where they just don't. Schools, for example, or people that are dependent upon the revenue of enrollment, and when those people are showing up, they're really hurting right now. So in those cases, I think you're having to find a strategic way to weather the storm. And if that does involve rent, then we're just encouraging real open communication with the landlord and trying to find a way to make this work. And too early to tell, in terms of, what this is going to look like 2, 3 months down the road. But in the cases that I've been involved with, I can tell you that we've been having very good conversations with the landlord, try and shore up that situation. Um, and I've been, again, I would just say, pretty surprised about the sort of level of humanity on this that I've been involved in, and I think that comes from our perspective in setting the table correctly, and that is to monitor the situation, and certainly not advise any type of opportunistic strike here.
Chris, thanks for that. I respect it immensely because I think that's how our view is too. We're kind of in this together. I like the idea of the case by case basis with the tenant because it is an ongoing mutual relationship that we want to try to preserve with tenants if we obviously can. And I don't think anybody wants to approach it from being heavy handed. It's just we have to be as practical and pragmatic as the tenants do too, which is why I think even for the federal government loans, they have to submit current financial statements and really show that this is affecting them. And then we can really make real decisions to make sure that, as a landlord with a portfolio of a number of tenants, not really even speaking from me in my position, but if I were to take any landlord, if they were to start forgiving rent and start showing preferential treatment rather than based on need, they could get in trouble really fast without really knowing where their portfolio is. So I don't think we're asking tenants to provide that information for any other reason than to make sure that we're being prudent and we're making sure that we can do our part, that if there is somebody that really has need, we can help find it. And then we're all kind of in this together for, others that might, the Amazons, the healthcare providers that are still really on the up and up right now. Their part of their contribution is continuing to just move forward as business as usual because they haven't been as affected. And so I agree. With the sense of humanity, I think that we are in this together, and that's the approach that we're taking.
I think Angela talked a bit ago about unintended, well, how's this going to change the landscape in the future? And I can tell you right now, lenders are going to be much more um, cautious and careful in analyzing tenants in future deals. Right now, we're still doing deals. We're still working on loans. And every lender wants to know, I mean, if there's a tenant that's asked for relief, that kills that deal. It kills the deal. And, the ability to retail is going to be significantly impacted. Hospitality is going to be significantly impacted in the future. Here we are, it's a recession, but it's a black swan kind of event. It's not something anybody anticipated, this pandemic. It happens every 100 years, maybe. But you've got whole sections of the economy, like retail, restaurants, hotels, where tenants are just immediately going and saying, hey, we need relief from rent, and landlords are coming and saying, hey, we need relief from our mortgage payment. And that's going to have an effect in the future that it's going to be significantly more difficult to get retail deals done and to get hospitality deals done. It's going to be at a lower LTV. They're going to require more cash. So it's going to have a real negative effect that's going to last for years and years in the economy of what's happening right now. And it's interesting that we have these contracts. We have had some conversations with some lenders and some economists and some borrowers about, look, let's just let the system work the way it's set up. And the way the system works, the way it's set up right now, is if a tenant doesn't pay rent, you default that tenant and kick them out. If a landlord or a borrower doesn't pay his mortgage, you foreclose and take the property back. There's these things, and where the help needs to be, instead of saying, hey, landlord, give me relief, or hey, lender, give me relief, who have their own obligations, we need to come in and help those tenants at the ground level, as opposed to going up the line saying landlord and mortgage lender, give us help. That's where the stimulus needs to go. It needs to go to those tenants who can't make their payments. And so if you let the system function, it should work out. We're just throwing all this money out, and this is one of the last questions here is the CARES Act. We're throwing all this money, but is it getting to the people that really need it? I mean, we all know a lot of landlords and developers that have lots and lots of money They could service their loans or could make their payments, but they're just saying, hey. So it's an interesting concept about how we should deal with this problem. And right now we're dealing with it by saying, landlord help me, mortgage lender help me, as opposed to saying, can I get help somewhere else? And we've spent 100 years or 200 years setting up this system, and we're right now in the last 3 weeks or 4 weeks trying to undo it. And the system is, if you don't pay your mortgage because you have this contract, or you don't pay your lease, you're going to get evicted. You're going to get foreclosed on.
There's a lot of small businesses, though, that are spending an enormous amount of their revenue in rent just to survive.
Right.
And
And
it's
so,
not just about month or two or three. They're worried about the back end of this, Henry, and how they're even going to survive 6, 7, 8, 10, 12 months from now.
I
And
agree.
there's
You're
so
not
much,
advocating,
for people like that. I agree that's,
you don't.
where it needs to get to, but there's some real concern. I'm talking about the small business owners, the mom and pops.
I think you're right, and I'm not advocating that but we have these contracts. It's the landlord's decision, it's the mortgage lender's decision whether they're able to help. But if we're giving relief, if the federal government or whoever the taxpayers give relief, it needs to get to those small businesses
Mm-hmm.
so they can make their mortgage.
Agreed.
As I've seen, I think when we come out of this, 25% of all restaurants will disappear. 10 or 15% of all mom and pop businesses are going to disappear. They're
Yeah.
not going to be able to come back.
Yeah.
It's going to take 5 years, 10 years for this to recover.
Yeah. Yeah. Fortunately, I'm an office broker, I'm so, again, I think that we're not seeing it on the level that retail is. Certainly, our friends that are retail owners, I'm talking to them quite a bit. They're getting inundated in calls, and some of it definitely does feel like some of these companies are being pretty heavy-handed with it. Jade, on the office side, again, I think what I would say is that I've been really sort of surprised at the kind of who we've heard from, um, and also that I'm surprised that there hasn't been more of the we need immediate abatement now discussion, I'm feeling pretty fortunate that's the way it is, because to both of these my co-guest points, it's the memory is long, and we have to remember how we handle ourselves now is going to be remembered down the line. And I think that is something I've learned from past recessions. Indeed, just because you have the lever doesn't mean you should use it all the time, or you should use it very wisely, in this case, sympathetically. Because I think there's opportunities to come in and address the situation you're having, if it's very real, in an open and communicative way, and find a way to find something that works for both parties. And I think that's what we've got to do right now.
Great.
Well, the key, real briefly, as a landlord, you look at that tenant and if you take all emotion out, you take all, charity out of the situation, you look at the contract and is this a tenant I want to keep in my building? Or can I find another tenant to replace that tenant? And that's part of the issue is, if you get rid of that tenant because they can't pay, are you going to be able to put another tenant in there?
Yeah.
Or is it worth it to dip into your own pocket and try and help that tenant through this downturn because you want to preserve them in your building? That's with no emotion and no, charity or anything like that in the deal. And a lot of these big life insurance company lenders, they're soulless entities. It's not nationwide charities. It's nationwide life. It's not all state charities. It's all state. They're a big corporation and they don't have the ability. They've got stakeholders, stockholders, mutual, and the decisions they're making are similar. What do we do is it worth it to us to help this landlord or not, or do we foreclose? And like you said, we've been through downturns. I mean, there was a lot of foreclosures and deals in the last downturn.
Yep.
And I think this one's different. The last one, people kind of felt like it was their own fault because they were out over leveraging and borrowing too much and mortgages and all that stuff. This one is this little teeny tiny microscopic virus that nobody really had any play in it. And so people say, well, okay, let's help each other out. Last time people weren't helping each other out very much. They were
Yeah.
foreclosing and
Yeah.
kicking tenants out and all that kind of stuff. So,
Right.
I don't know.
And I've been really impressed with like the ingenuity too of people and how they're getting through it, regardless of if, you know, my son had a Zoom birthday party last night, or, you know, driving by a restaurant that is just a sit down restaurant, and they've somehow found a way to turn themselves into a drive through and create family meal kits. And I've been really impressed with the ingenuity of people to find a way to kind of weather the storm. We're in this kind of together. We're all not used to being socially isolated and cooped up, and it is interesting times for sure. And but that's what I think we'll get through it. And I think that so far too, to speak to our tenant base, Chris, on the industrial side, people seem to be pretty healthy, unless they're on the event setup side. Which, you know, we do have a few of those with the conventions and things like that that are definitely in trouble because they're looking at their books and they don't have anything scheduled for 12 months out.
Right.
So this isn't just a 30-day thing for them. They're looking forward, saying this could be 12, 18 months. So those types of tenants we're really watching right now, and they're trying to figure out ways that they can pivot and stay viable and do what they can. But for the rest of, you know, the base, industrial base and manufacturing on our side, is healthy and strong. And so that's why I say if a tenant comes to us, it seems to be a little bit more opportunistic, but we do know that there's tenants in those sectors that are obviously being affected, and those are the ones that you know, we've had conversations with, and they've been very favorable and very symbiotic and just as Chris has described it. So we're hopeful.
Yeah, and these are tenants that were probably quite healthy, had a good business plan.
Right.
And how do you underwrite a pandemic? I'm not sure that we were really thinking about what that means to all of a sudden, through no fault of your own, you can't do business. That's or if people can't show up, you know, to the office for, you know, whatever that might be. This is a new way of preparation, maybe going forward, I suppose, for everybody. But
And it's going to forever change the landscape.
yeah,
Like we were talking about earlier.
yeah,
It's tougher to get certain types of real estate financed. I've already got lenders talking about the future, and you know, and now they ask, okay, is this borrower asking for any relief? If they are, we don't want to deal with them. So,
you know, it's something I want to comment on. I was just thinking about something you guys have both touched on, and that is, if you're, you know, we have seen some requests from companies, but I think Angela made the point. We were a little worried about them prior to this happening. You know, we were already watching them, so it's not a huge surprise where there's been a couple of instances like this. You know, that there was already something going on in the business that made us a little suspect. And you know, and I'm just speaking from the landlord's perspective in looking at that, not from the tenant's perspective. But I think that's you know, pretty telling right now too, that there's so many of these tenants that are riding the storm out the best they can right now and not approaching the landlord.
Well, I think that's about all the time we have, and all of you have shared such informative and vital information for our viewers, and we know you're very busy, so thank you for taking time out of your day and sharing your knowledge with us to help our membership. We will be posting these videos every week to help our membership. If you have any questions about any topics, or you'd like to recommend a topic we talk about, feel free to email Lindsay at naiop@naioputah.org, and we will see you next time.
Thanks, guys.